Okay, Monday, 12th of August 2024. So, Adrian's daily vlog, sharing smart stuff men should know, Money Monday, Bitcoin, and the other stuff. Understanding Bitcoin's price volatility. So, as you see in the chart on any time frame, Bitcoin's price is all over the place, rather inconsistent. So some would say it's volatile. You can't use it as a currency. The price is unpredictable. It's one thing today, something else tomorrow, all over the place, which is understandable. The logic is sound, but the starting point is completely upside down. Rather than looking at the volatility in terms of price, or priced in dollars or euros or pound, it's the opposite. Paradoxically, or no, counterintuitively, Bitcoin is the most stable thing out there. It is the stable coin. One Satoshi last week, last month, last year will be equivalent to one Satoshi today, tomorrow, next week, next year. That's the same. Bitcoin itself, the ecosystem, the timestamp chain itself, all the Satoshis, they're all the same, technically. But the price, there's no volatility here. That's what I meant to say. No volatility here, but over here, priced in dollars, priced in euros, priced in pounds, pesos, zloty, you name it. It's all over the place, inconsistent. But it's worth understanding that false dichotomy right there, separating the two. Satoshis and Bitcoin itself is completely stable. The price over here is all over the place. Now, why? Because this is the mathematical world. It's all code. It's all computer science. This over here is the human world, the market, the sentiment, the traders, the technical analysis, the fundamental analysis. All of that. It's the market swing between fear and greed. But this is maths. This is just is. Satoshis just are. But this is all over the place. Good news today, bad news tomorrow. Price, buy, sell, this, that. Options, expiring futures contracts, short sellers, short squeeze, you name it. All kinds of things are happening over here. The fundamental analysis, technical analysis is saying up, down, left, right, who knows what else. That's the erratic side. The volatility is an expression of human indecisiveness. The market itself, the price action you see on a screen, is a mathematical representation of human action. Meaning it is more buyers and sellers and the market goes up, more sellers than buyers, the market goes down, intrinsically. So it's worth understanding that dichotomy right there. Satoshis are actually the stable coin. Bitcoin itself is the most stable thing there is. And when you follow that logic, Bitcoin itself is the least risky thing. But that's another conversation. I think I did a video about this. I'm quite sure I did, or I mentioned it before in the past. It's the least riskiest thing because it has the least risk factors. No third party, no counterparty risk, no office, no individual person, no central point of attack or failure. And because of that nature, it intrinsically means that Bitcoin has never had, and you could argue never needed, but it depends who you read technicalities, never had a bailout. The thing itself has never had a bailout. People trading it, speculators, they might have needed bailouts or had margin calls by all means, but the thing itself, never. So that's worth understanding the difference there. So Bitcoin paradoxically is not volatile, but the market itself is, the traders, options market, etc. Bitcoin is, in one sense, a true free market, as in a sense of laissez-faire, as in a sense of there's no rules or regulations. There's only the rules themselves on the network, the protocol. You can't truly ban Bitcoin. You can only separate yourself from the network. Therefore, you can't truly enforce anything on the network because, technically speaking, there's no one to enforce it on. There's no single person, no one single office, things like that. There's no one to enforce. There's no one to arrest. There's no office to raid. Decentralized nature. So it's never had a bail-in. Very important. So it's a free market. A free market of what? By this metric here, the Satoshis and the fiat value of price discovery. I saw a great tweet a week or so ago saying that Bitcoin is stuck range bound, bounds between two prices of 0 and something high like infinity, I can't remember, and it's range bound between that. That's a great way of expressing the human emotions and sentiment of the time. It's going anything between 0 and infinity. Very correct. I also saw another tweet saying that Bitcoin is a lagging indicator of mankind's understanding of finance. Very, very true. So what that means then is it's price discovery. It means that Bitcoin truly has no top. There's no limit to how high it can go because the maths, follow the maths, there's no limit to how much fiat can exist. Bitcoin's got no top because fiat's got no bottom. There's no limit to how much fiat can be printed, fractional reserve lending, QE and beyond, quantitative easing and beyond. Therefore, Bitcoin's got no top, meaning it's got no limit because of the nature of its fixed supply and the unlimited supply of fiat, pounds, dollars, euros, and fixed supply, 21 million satoshis. That. All this cash has to squeeze into this thing here, this fixed asset here, 21 million. So all this cash of the globe, M2 money supply and beyond, has to squeeze inside this tiny orange box. And the more cash there is, more volatility there is, more cash slushing around there is, the more volatile this is going to be because the price will ebb and flow. Again, it's range bound between 0 and infinity. Meaning that as more people understand the value of Bitcoin, the first principles, the value proposition, the unique selling point, why they should bother with this thing, then they're going to start adopting it and using it. And then that's the game theory, the aligned incentives. Price goes up, more users, more apps, more infrastructure, more development, including mining. Mining pushes up hash rate increases security. The more security is, the more people are willing and able to use it and adopt it. Therefore, price goes up. It's a beautiful yet vicious feedback loop, a positive feedback loop. And all these things happen in a human world, and it pushes Bitcoin up. Again, Bitcoin's a stable coin, and all these things, development here, going bust there, building this, establishing that, YouTube channel this, videos here, videos there, education there, awareness over here, all these things increase it and push it up. And it's range bound. Why? Because as more people understand it, and all that money out there in the world will go into it. People will have mental flip from saving or being on what's called a fiat standard onto a Bitcoin standard, measuring their wealth and their time not in pounds and dollars and euros, but in satoshis. And that, I think that mental flip will take 15 to 30 years. Worst case, pessimistic time frame, 30 years, and we'll see a complete different world compared to today. Fair enough. And it seems then also that that volatility is a feature, not a bug. It's one of those things we have to accept. We have to accept and adapt its volatility. I did a video about this as well. Accept and adapt things in life. Don't try and fight them like gravity or water. Don't try and fight these things. Accept and adapt. That's just the way it is. Very important. And you could also even say that volatility plays a role in the Max Payne theory, which means that for these things in the market and the world to happen, someone over here, or over there, or someone in the world has to have Max Payne. For the price to go to $1 million a coin, Max Payne theory says the global economy has to be worse than 2008. There has to be a bigger crash and more catastrophe and chaos and uncertainty than back then. Or something fundamental needs to happen that would spark, that justify that price range, and it could be anything, and awareness, understanding, and other institutional adoption, or big governments, as in big global powers saying to put it on their balance sheet, things like that. Fair enough. So volatility is part of it, because you could also be a bit more practical and pragmatic and say, well, volatility is by the dip. What does that mean? Well, I'm sure you can figure that out. But it's a chance for some people. So it's a feature. Interesting. And then when you follow that logic, what you start to see is that there is a certain segment, let's say, of people who are the hodlers of last resort. Nice little phrase, hodlers of last resort. The people that are always buying and accumulating more satoshis and putting it into cold storage. I did a video about this as well, hodling. Putting it in cold storage and protecting their wealth, protecting their time. Because remember, satoshis are the real stable coin, the real stable currency, stays the same. One satoshi yesterday is the same as today. I.e., in other words, the satoshis don't get debased. 21 million Bitcoin will ever exist. Very important. And those people, those class of people, those segment of people will always be buying, and the price, you could arguably say, that they would sell at will be extremely high, much higher than today. So no matter where the price goes, they're not going to sell. and always accumulating more because they understand the key principles. The first principles of Bitcoin: money you can earn, money you can spend, apolitical, decentralized, censorship resistant with a fixed supply. Powerful stuff. And they're going to be accumulating and holding for the long term, because there's a nice meme in the space that talks about you're not hodling for your first name, but for your last name. You're not hodling for you per se, but for your family, your last name. And when you think about it, that makes sense, because people who are born today, and they are hodlers if they have some Bitcoin in general in a paper wallet or cold wallet in general, maybe tucked away in a trust or elsewhere, hidden away. And they're going to be hodling by default for the next, 10, 15, 20 years? 10, 15, 20 years. How many halvenings is that? 4 halvenings at least? They're not going to be selling maybe in 15 years. And then you could arguably say the parents, for example, will be accumulating more Satoshis in the meantime, depending on knowledge, conviction, circumstance, life. Again, there's that volatility right there. Life. Things happen, but Satoshis are still the same. The network is still the same. There's a nice meme as well. TikTok next block. No matter what happens out there, every 10 minutes, another block on the time chain, on the blockchain, another block, recording the past through transactions. And transactions are incentives, motivations, purposes, ideas. They're intentional. Interesting, but that's another conversation. So yes, so it's important to understand volatility. It's part of Bitcoin. It is part of Bitcoin. And they could also go one step further and say you've got a choice. Saving in fiat, which is stable, let's say, but guaranteed over time to lose purchasing power, or the opposite, Bitcoin, which is volatile, but over time guarantees to increase in purchasing power. Because again, why? That orange box. All that 21 million Bitcoin, all that money in the world, M2 money supplies to fit inside this. So that means that one Bitcoin only goes one way on a price chart. And look at the logarithmic price of Bitcoin. It only goes one way. That's powerful. So you've got this asset that decreases in purchasing power, inflation, and the Bank of England, for example, has admitted this. Or this asset that increases in purchasing power, this inflationary asset, deflationary asset. And as per that meme, it's range bound between 0 and infinity, which is nice. What does that say? It means that it could go anywhere, but because the first principles, and as they never change, and as more people understand them, where does the price go? Over the long time. Oh, when in doubt, always zoom out. As you zoom out on the price chart, the trend becomes incredibly and crystal clear as to where the price is going. And you could do that yourself. Coin market cap, Bitcoin price, press log, L-O-G, and the trend, the pattern becomes incredibly clear. And then some people would say that Bitcoin has been in a bull market since 2009, 10, 11, with intermittent dips and some local bull markets here and there. That's quite a thing to say. But the maths, the chart, remember, the chart is an indication of human action, of human decisions. It's clear. Powerful, powerful stuff. And remember, as that other meme, the other tweet I saw, I can't remember who did it, or who tweeted it. Bitcoin's price is a lagging indicator of mankind's, or humans' understanding of finance and money. Powerful stuff. So volatility is part of the deal. Yeah, but very important. But otherwise, you will see me, Adrian's daily vlog, sharing smart stuff men should know. Subscribe for more. You will see me tomorrow.